The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we get the Dow Industrials down 15. The Nasdaq is off 2. S&Ps are off $1.50. Gold's down 29 bucks at 11.02. You get silver down 9 cents at 14.73. Oil's down 56 at 50.33. The bonds, we have the 10-year off 8 ticks, 125. The 30-year off 4 ticks. And King Dollar's up 36 ticks at 98.02. And bottom line is that we're going to go over, first off, and look at that gold market. So last night, the GCQ. Asia opens up. Bottom line, they sell it down. They sell it down fast, furious, all the above. GCQ5. So the press part of the deal coming across, folks, was that China came out with the amount of gold that it has bought in the last 4 to 5 years, and it was substantial but much lighter than many folks thought was happening. So what do we have? Intraday the bottom line is that it goes fast, furious, all of the above. Gets down into the 1180 mark, stayed there, as I said a little bit earlier, all of about a split second. So what we just had in the gold market at 1010 is another sell. You know, we'll see whether it can basically ram that thing under 1100, or in fact you're going to make a run once again, which we did at 0240 for the aspect of 1115, or do a rejection of total price. What you absolutely have here in the gold market is this. When you get an extension down of 1080, there's no more sells under there, folks, okay? You know, if you want to basically take out every person that was in the gold market, in the futures market, this is with a sell, well, that was achieved. There's no two ways about that. If we go over and we take a look at the GLD and see where we're trading inside this GLD, what you're going to see is this. The GLD right now is trading into the break topside from 2011. We're down 284. We're at a price point of 105.80. And what you're going to see there, let me put this one up. In fact, I'll put this over here so you can see where we're at. So where we're at right now, it hit 105.62. When that had broken topside, 103.25 was the first leg. That was in November of 09. It ended up going higher in December of 09 also. Bottom line is it's testing that area right now. Now it's doing that on dramatically lighter volume. We'll see whether that holds price. If you're going to go into that market and look for some equities, I suggest if you are in the option market that you want to go into that market. Why? Because that's a defined risk type of market instead of just going in the equity market. Now, that being said, let's go over to the dollar, because what we know is that the dollar hasn't moved. So it's like, okay, and you know, I actually said to someone last night when I was communicating with a couple other people that were in the gold market pretty heavily, the trashing that is happening right now, to me, that's unfortunately, you know, I wasn't looking for gold to go to 1080, but bottom line is that when it does go to 1080 and they can't, and the dollar doesn't go up, what that's telling me is that, okay, you get down there, we got the clean out. Now the question is, are there going to be any buyers? What I can show you right now this gets interesting. I haven't gone through all of them yet, but someone, I'm going to put Gold Corp up for a second. I don't own Gold Corp, and I'm not looking to own Gold Corp right now. But what has happened is this: 5 million. Let me see something. Yeah, see, this is what's going on right now. This is pretty intense, folks. Okay, you stop bringing some of these gold stocks up, right? these gold stocks have more volume in the first half hour than they've had all day, which is just, so someone is in there buying hand over fist. I'll show you something. Here, if we go to Great Panther, right? I can do all of them right now. Great Panther is already have 267,000 shares traded, and normally they're trading that per day. If you go to Gold Corp, right? It's right across the board, though. Right before I was getting on, I was looking at this. Gold Corp already has 5 million shares traded, and normally it trades 7, 8, 9 million shares. Let's see if it's all over the place here. This is going to be interesting watching this shake out. AEM. So it's like, what's that? It doesn't mean they have to go back up, but what it means is that you have monsters buying. So AEM has 922,000 thus far. Yeah, and that trades 1.2 million. So there's buyers in that market. That's the bottom line. So what does that mean overall? It means overall that by the end of this today, you could actually get some action going. If we go to VGZ, we take a look at Vista. Vista has 132,000, and that baby, let me just, yeah, that does that. It does two or 300,000 a day. You know, so there's buying in there. The real question is the buying going to make a difference as to price? You know, that's what it comes down to. And as a couple of tigers say, people are selling, not buying. Well, I could go through this a little bit more and show you that if they were selling on the ones that I just brought up, they'd be going down, and they're not going down. Great Panther and Vista actually are off all of 1/8 of a penny, and it's on the bid versus the offer. But anyway, that's what makes a market. There's no two ways about that. We go over to the NASDAQ. We take a look at the 3 Qs right here. This is what you have happening inside the 3 Qs. The 3 Qs on a weekly basis got over the high last week. We did that with 142 million shares versus 178. The longer that you stay over the 111.16, that means that the higher you can actually go. So we'll see how that handles it. What is absolutely not cooperating at this point, doesn't mean it won't, is the S&P. The S&P right now, if we take a look at this S&P, you're right next to the highs, and the juice still isn't there in order to get up and over it. The future went to 21.22 today. It's just selling off slightly. Excuse me, last high out here was exactly the 21.22, and that's why you want to wrap your head around the cash S&P, because what the cash S&P has done is that it just missed the high of 21.29.87. We did the 21.29, but we did it on a 0.3. If we go take a look at the Dow Industrials, what you have with the Dow. Dow Industrials actually are not as weak as the small caps, but are weak. You know, the Dow, the last high in the Dow out here was 188. We made it last Thursday rather, to 131. The high is actually 351. You know, the Russell, we take a look at the Russell 2000. What we have with the Russell 2000 is that the Russell 2000 never made the downdraft number of 1273.92. So the Russell would be the weakest indice. Dow would be second. You know, S&P would be third. And then you'd have, of course, have the NASDAQ, and the NASDAQ is strong. Inside the NDX 100, what we have out here today, the leader is Green Mountain. That's up $2. Regeneron is up $12.37. You have Tesla up $4.46, and Priceline's up $19. Taken away from it, putting a little weakness in it, is the Discovery Communications. Netflix is down $3.78, and then you have Micron down 49 cents. Inside the Dow Industrials, what do you have happening inside the Dow? The strength inside the Dow is Visa. That's up $1.15. Apple is up $1.87. Coke is up 20 cents. And you have Big Mac up 47 cents. Taken away from it, DuPont is down 57. Intel is down 28. Cisco is off 23. And Home Depot is down 91. Some of the high-volume stocks in this market right now, PayPal, that's the spinoff. That's up $2.12. You got Netflix. Facebook's up $1.20. They got, let's see, Morgan Stanley's flat. You got Newmont Mining down $1.70. Let's go and we take a look at Newmont for a second. What you do have, I'll look at Goldcorp first. Goldcorp's going after some of the gold stocks have already taken out the 2008 low, but that's what Goldcorp's going after right now. We've hit 1337, 1384 is the number. So you close under 1384, that sets up that, you can get down to 978, which is pretty heavy, no doubt about that. Some of the Dow stocks, we have Marvell down 20 cents. You get Boeing down 72. Oxy's off 126. If we go over to the XLE and we take a look at the XLE, that'll give us an idea of what's going on inside the oil market. XLE is going after its swing point. That's the bottom line. The XLE right now, we've done 2.5 million shares thus far today. If you get 20 million shares going on the XLE, that's going to be an ABC. It's going to be an ABC down. ExxonMobil, if we go take a look at ExxonMobil. ExxonMobil's flat. Well, it's down 67, but that's building cause to get into that lower swing point. Chevron, CVX, broke the lower swing point. Now, it broke it on Friday, and it had a lighter volume. We did 8 million shares versus the 11 million. So the longer we stay under the 93.26, however, is that the lower that baby can go. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down 11. Nasdaq's off 4. S&Ps are off $1. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We got the Dow down 6, Nasdaq's up 4, S&P's are flat. And we go around the world. We take a look around the world. We go first over to the UK. UK is also trading flat right now. We are at 67.77. Now, what's intriguing about this is that the UK also, folks, didn't make its swing high from June 24th. So the highs in the UK are 71.22. You're at 67, and we did a couple separate different legs down, and what the UK has shown, the FTSE 100, is that it had broke topside. Now, this is pretty cool watching this because we'll see how the NASDAQ shakes out, but this is what the FTSE had done. The FTSE had been in a consolidation, just as our market's in a consolidation for 6 months. First high that was generated out there was May 24th. Goes back and forth for 5 months, breaks topside. Now, as it broke topside, it stayed topside for approximately 2 months. It goes back inside the range, and as it came back inside the range, it actually had juice on the way down. Now, what it faces is that, okay, it looks like it's going to go after the 64.30, the swing point that was generated out there on the 10th, but what is still sticking out there, which is a trip in itself, is the October swing low. So we'll see how that baby shakes out. But it certainly, the divergence is out there in these markets. Now, we go to the DAX in Germany. DAX in Germany, same setup. The DAX in Germany were at 11,737. The high was 12,338. The DAX in Germany also couldn't handle, not the first high, meaning the high, it couldn't handle the last time it was up, which is the 26th of May. So that also is basically, we had come down there with 96 million shares. It tried to get it last week with 86, couldn't handle it. This morning it came up with even less and couldn't handle it. Now we bring that back and we take that and we look at that a little larger. The difference is that the DAX in Germany did break out and broke out in January, and it's been up at these levels. So we'll see if the DAX, in fact, wants to get back inside that lower range. It would take quite a bit for the DAX to get back inside that lower range, by the way. Hang Seng, we go over, we take a look at Asia and see what's happening in Asia. We had happening last night, and the Hang Seng was a flat market. All of Asia last night was actually flat. We're 25,400 right now. That's off the highs of 28,500. And that does have that high volume swing low out there from the July 8th level. And I expect you're going to see that level get hit once again. We go to the XLF, the financials. You've had a lot of financials come out with numbers this morning. You had Morgan Stanley come out with numbers. Morgan Stanley's trading at $40.20, and it broke out, and thus far it's failed. You know, Morgan Stanley opened up at 41.04 this morning. It's at 40.20 right now. If it gets back inside this 39.19 area, that would set up a failure at those highs. And if we bring this back a bit, what you're going to see is that what Morgan Stanley is doing, the high generated in Morgan Stanley was in 2000. That high was $90. The second high was in 2007. That high was $75. What Morgan Stanley thus far has done is going into the downdraft from the first expansion down in September of 08. Now, that baby had come down and like all the rest of the equities with huge volume. It was 1.4 billion shares that comes down on. It was trying to get up into that area with 266 million. It's not going to make it. That's the supply line, and that supply line inside Morgan Stanley is pretty extensive, really extensive, actually. Everyone that has been in Morgan Stanley from 1999 going all the way over to 2008, so I figure 9 years, that's their supply line. That's where they're looking to get their money back. Yeah, so we go take a look at, let's see, so what do we have? Goldman Sachs. Goldman had also come out with numbers. Goldman really moved sideways. No big deal. The longer that Goldman stays over the 191 area, that could, you know, basically build some cause. I suspect it's going to get lower, but we'll see how it handles this higher price. Thus far, the higher price, it hasn't been able to handle. It's just gone sideways. Now, one of the next big numbers coming out is going to be Apple. You know, Google came out Friday, extraordinary move forward. No two ways about that. Now, Apple is trading at 131.55. That's going to come out after the close tomorrow night. Thus far, it hasn't any juice, you know, and that's a big difference, you know, because you have three separate highs out here that are trading that are at 133 to 134.54. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get a flat market out here. The Dow's down 2, Nasdaq's off $1.50, and the futures are flat. If we go over and we take a look at the transports, let's take a look at. So, transports having a hard time getting off the lows. This is a flat market also. What we do have with the transports, however, is that the transports are trading back where we were in June of 2014 rather. You're right at the October swing point. Now, what's going to be intriguing about the transports is this, is that they've come down to the October swing point, that the high of that swing point is 81.69, and it did reject that level. We got to 79.70. So the real key is going to be, once you get the rejection in place, will you get a sign of strength after that? So the transports have the potential to give us a lot more information about where the S&P wants to go. Because what's intriguing, of course, is that we came off those highs, you came off those highs with a vengeance inside the transports, yet the S&P is still at highs. If we go over to now inside the transports, it was the rails that basically derailed the transports in a huge way. So if we do go over there and we take a look at Union Pacific first, what you're going to see is that equity goes south, big time. Goes from a price point of 124 to 98. Now this got into and under the October swing point. Yeah, okay, so today is going to be a big day inside the rails. The reason being is that you're getting a little traction. It's up $1.19, and it's going to try to, I suspect, get inside the higher range. Now, we'll find out whether it makes it or not. But this is the type of setup that will release a huge amount of information. I wouldn't be buying this, by the way, and not even close. But you'd be looking at this, because if it does take out, right now, we've got to 98.76. 98.70 is the last minor swing high that it had. And at that swing high, we did 4.3 million shares. Now you're at 990. So if it can't even handle that high, that little swing, that's telling you that it wants to go to lower price. That would be the bearish part. The bullish part would be if it does handle that, because it has a shot right now to handle it and to handle it with volume, because, we've only done 4 million there, I think, right? Yeah, 4.3 million. So we've already done 990,000. So it can do the juice. Now, if it does that, then it's like, okay, is that going to be a large bounce in that market, or in fact, did that market do what it's supposed to do, meaning go down to that October swing pair low? It rejected the swing low. We know that. And now the key is going to be, okay, what is it doing after that fact? Okay, so that's that sector you want to basically keep your eye on in an extraordinary way. Bonds. Let's go over to the bond market. Now, if we take a look at the TLT, the 20-year plus, what you're going to see out here is that bonds continue to want higher price. It's pretty amazing watching this whole thing shake out, because what we no doubt have is you have markets at highs, you have the VIX at no one is scared of anything at lows, and bonds, came off that high of, if we look at the TLT, the high is 138. You did a retracement on the way down, but the retracement that we did, that was a normal retracement in a market. It was going against how we went higher, and it did it with lighter volume. So now the real key is going to be like, okay, man, are you going to reject these lower prices out here, which thus far it already has? And what you want to wrap your head around in the bond market is this, is that we've had 3 separate signs of strength off the lows that were generated on June 10th. So the real key is going to be, okay, are you going to get another sign of strength as the TLT goes into 120.57? And if you get that, that's setting up much higher price. And then you have to ask yourself, if that's setting up higher price, what is going on that much money is getting pushed into bonds once again? So we go over and we take a look at the, let's see, I'll put the 10-year up. What you're going to see in the 10-year thus far this morning is that we've done 470,000 contracts. You're backing into 1.3 million. It's rejected price once again, and the strength and the cause that it's built is pretty substantial right now. We've been building cause since June 2nd, with a high swing point. So we'll see where that swing point takes us. When you take a look at the yield, right now yielding 2.369. You go take a look at the 30-year. Now, the 30-year has been stronger than the 10-year. 30-year right now is down 5 ticks. 30-year is going to need more volume, though. That's how this shakes out also. You're building cause. We'll see how it wants to attack. What I do expect, we're at 151.30. What I do expect you're going to see is that the 30-year is going to end up attacking its swing high prior to the 10-year. The 30-year more than likely will leg up the 10-year. That's the way it seems to be shaking out right now. If we go back over and we just take a look at the futures, the S&Ps in the futures market, you're going to see it looks like we just got a flat market out here. So the real key is going to be how many more numbers are coming out after the close. And this week is going to be substantial also, the amount of numbers that are coming out. The big one, of course, tomorrow is going to be Apple. And what's intriguing is that Apple hasn't been able to move, but it certainly is at the top of its range, okay? So the bottom line is that, okay, it's time to move. And we're going to see whether Apple can make it or break it. Apple has been up here since February of 2015, at these exact highs, so we're going to know. We're going to know real close. And Apple does have a high volume swing on a weekly basis at that 134.15. So that's saying more than likely that we're going to at least test that area. If we put this on a monthly basis, what you're going to see is that there's no juice at this high. So we've been at this high right now for 6 months. Apple has, and the last time Apple had any juice, I don't want to think about it. I mean, it's so much lower. So, smartphones though, totally. Bottom line, they have that market. They have that market in an extraordinary way. There's no two ways about that. We go over and we take a look at some of the future in the future market. Right now, it's pretty wild. So the future market, if you happen to watch on Tiger TV, there's only one future that is positive, and that's live cattle by 10 cents. You have sugar down 3.2%, wheat's off 2.6, gold's down 2.3, Natural gas 2.2, corn 1.7, crude oil 1%. When you look at this, you can make the argument that, yeah, we're in deflation versus inflation, because each and every one of these are negative. And it's certainly the thing that's really cool, if you're in this market, folks, is the dollar is negative now. Okay, so the correlation, inside the dollar as the driving those commodities lower, it's certainly not out here today. It's not even close either. If we bring the dollar up for a second, what you're going to see, DX5, okay. What you're going to see in the dollar, DXU5. Okay, dollar index right now, we still, look at that. I wish we'd hit that thing. Okay, so it's 98.29 we're trying to hit. We hit 98.23. And it would be much better if, in fact, the dollar could basically get up there and do it. It doesn't look like it's going to do it now. The reason I'm saying that is that what we've had is this, is that the dollar at 10 o'clock, as soon as we get on, hit the 98.23 level, came off that level at 98, and did it with some juice on the way down. So more than likely, you're going to get another sell down inside that dollar. Volatility, I suspect this volatility is probably going to accelerate as we move through the day inside this commodity market. That's the way this seems to be shaking out right now. If we go take a look at Ranggold Resources, that's down $3. That's down 5% right now. That's at 58.75. We take this and we put this on a monthly basis. Now, Ranggold has held up in that consolidation. The bottom of that consolidation is $58. Now, Ranggold's also going into the 2009 break top side. We'll see whether it can hold. And this is going to be a crucial one, watching how this baby shakes out, because if Ranggold can't hold price, Ranggold on a fundamental basis is one of the best gold equities out there, meaning what they get gold out of the ground for, and what their supply, how that supply comes online. There's no two ways about it. If we go over and we take a look at Gold Corp, what Gold Corp is doing, Gold Corp is going after that 2008 low. And we're readily right next to it right now. Let's see, has it hit it yet? No, I think it's $9. No, it's 13. Oh, it's 13.86. It's the swing low is 13.84, and right now we're at 13.46. So bottom line is that if that can't hold that price, then Gold Corp's going to have some real problems, because then that would bring that all the way down to the 10.78 area. Intraday out here, what you've had thus far is that it hasn't tested that swing low yet, and that'll get tested. The 37 will get tested once again, and bottom line, we'll see whether we get a rejection or, in fact, it runs into lower prices. Walmart, let's go over and we take a look at Walmart. What we have between Walmart and Amazon, that game is still on. Walmart is flat today, 73.22. Walmart comes out with its numbers in August. If we go over to Amazon, we take a look at Amazon. Amazon comes out with its numbers Wednesday after the close. So Amazon's going to be another monster. Amazon's up $4 right now, over its last swing point of 452. Now, the last time, now watch this. This is going to be really cool watching this shake out. So Amazon has two gaps. Amazon had gapped up in January when it came out with its numbers. That was from $299, actually, $299 up to $359. Next time it come out, gapped up again, $386 up to $452. Three gap plays, folks. Stocks love to gap, whether it's 3 times up or 3 times down. I suspect the odds are going to be pretty intense that, you could get another third gap up. And if that's what you get, then it's going to be really intense. The reason being is the way 3 gap plays work is that whatever way the gap goes, that is normally how it will go after this is the big number, after all the gaps come back in and get filled. I mean, and this would be really a sick scene, because inside the Amazon structure, you're talking about gaps that are dramatically lower. So we'll see where that baby does shake out. But I suspect you're going to see continued volatility inside Amazon And because of the way that Google moved, Google won't be the only one that's moving like that. You know, it doesn't mean that, what I mean specifically is that the expansion up or down is game. The biotechs. Went last week, had some juice behind the move, and what we will see coming out this week is that the biotechs are going to start generating some numbers at the end of this week, at the beginning of next week. We have Amgen is out on the 30th. Let's see. You get Biogen. Oh, okay, so Biogen is this Thursday. Celgene, C-E-L-G. Celgene is this Wednesday. Let me see if Regeneron can actually, Regeneron's moving, so that may, now look at Regeneron's out the August 4th. That baby's breaking topside this morning. You know, so bottom line is that the IBB, no doubt, continues to put strength inside of the NASDAQ composite. Let's see. This is a beautiful thing. Thanks, Dave. Okay, so after the bell out here today, we have Crown Holdings coming out. Oh, Big Blue. Oh, interesting. Let's go over and take a look at Big Blue. So Big Blue's coming out after the close today. I suspect they're going to be buying more stock back, and Big Blue is still right into its gap. So the way Big Blue had traded down in a big way from 186 to 161, and that gets into 149 last time they come out with numbers. So we'll see where that shakes out, but I suspect Big Blue is not going to be able to handle anything out there. Tomorrow before the open, we're going to have Harley Davidson, you got Lexmark, you got Lockheed Martin, Manpower, United Technologies, and then after the bell tomorrow is going to be a big one, no doubt, because, this is going to be, tomorrow is going to be a trip after the bell. We have Apple, you have GoPro, you have Illumina, you have Intuitive Surgical, you have Microsoft, you have VMware, and you get Yahoo. Ooh, that's a big one. Okay, not Yahoo in general. I'm just saying for the NDX 100, what we will have out here tomorrow after the bell, no doubt, is a big one because so many of those equities that are Microsoft is a large weighting inside the NDX 100, and Microsoft right now. Look at the yin and yang of Microsoft. So, Microsoft came down with juice and then went back up. Not the same amount of juice, but did get to higher price. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back. Dow, NASDAQ, S&Ps, they're all flat, folks. Going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We get the Dow flat, Nasdaq's flat, S&P's flat, gold's down 27 at the 1104 mark. You got silver down 6 at 1477. Let's go over and take a look at that silver market next. SI 5. So silver got, and what's intriguing here is that they trashed silver on the 7th. That's when silver went from 1571 to 1462 with juice, mind you. Now, what silver has done, if you want to glean some information out of this marketplace, is this. We had come down with monster volume on the 7th. The 7th, we had come down with 95,000 contracts. This morning, we're at 41,000 contracts, and thus far, it has rejected that price. So that's going to be intriguing. Watch how silver shakes out here. We go back, and if we put silver on a continuous contract, we bring this back, and we put this on a monthly basis, what you're going to see is that right now the last swing point out here is 1410. We've hit the 1448 thus far. The swing points that it's going into, it hasn't quite got there yet. Where gold has actually, no, gold hasn't got there because gold went to 666 in 2008. Silver had the high of that was $13. The low was $8.40. So silver's actually, it's taken a whack. That's for sure in an extraordinary way. If we go over and take a look at the SLV, the SLV is trading at $14.14. That had traded at $14.03 on the 7th. Thus far this morning, we got to 14.08. Bottom line is that you need buyers in those markets, no doubt. What does get intriguing, though, with the dollar not in a negative position, each and every commodity is not only smoked, it's smoked pretty good. You get the sugar is down to 3. Well, let's go over and we take a look at crude oil right now. So you get crude trading at 50.72. We have 114,000 contracts. So watch this. This is the way crude trading, you know, we came off the high of 64 bucks. You're at 50. It is trying to get into the lows that were generated out here on the 18th, but the way we're trading out here today, this is way too much light volume to basically jam it into a lower price. That's the way it looks right now. So if, in fact, that's what we have, meaning that if the oil market wants to do excuse me, folks, a counter-trend bounce, that's going to be intriguing, and the aspect of what are the rest of the commodities going to do, and is there any help or salvation for gold whatsoever. I suspect we know that we're under the price point of what production cost is, you know, and there's been enough negative stories out there. I would have liked to see a few more negative stories, actually, or a few more folks saying, no, don't touch gold, when just the opposite this morning has happened. There's been a few people that said, okay, maybe you should be buying gold right now. What you want to see at these lows, folks, is you want to see zero folks saying, you know, buy at all, okay? Because that's just how gold makes bottoms, you know? It's certainly inside the equities that has happened. Inside the metal structure itself, it hasn't happened quite yet. If we go back over to the dollar a second, we take a look at that dollar. The dollar basically is screaming for lower price. You stay right there, folks. Our man, Mr. Basil Chapman's going to be coming up next with you. We got our man, of course, Dave White, Basil Chapman, Steve Rhodes, Dave White, myself. We'll be back here later. Have a great day. Have a safe day. Dow's up 10, Nasdaq's up 6, S&Ps are up $1.50. Stay right there. Basil's coming right up, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.